Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 8th of September 2021. Alright everyone, let's get into it. So, a bit of a kind of market turmoil overnight, over the last kind of like 24 hours. We had a bit of a sell-off. ETH went from, I think, about 3,800 or 3,900 to 3,000 and just below 3,000 on some exchanges. It seemed to have been a mass deleveraging event because there was just too much leverage in the system. There was just a massive sell-off, massive liquidations, and kind of, I think the liquidations were, I think, as big as what the May crash that we saw, or maybe almost as big. So yeah, it was very similar. I kind of felt similar. I was sitting here at my computer watching it kind of like fall, and I was like, wow, okay, this is starting to feel like what it felt like in May. And then it went to 3K and it bounced pretty strongly off that, and I was like, okay, well, that should be the bottom now, and it was. And well, I mean, it is for now. Let's not kind of like say it's going to be the bottom for for going forward. I don't know what's going to happen going forward, but I don't really have any concerns about this. I don't feel like a pit in my stomach. I'm not really upset over this at all. Like, I bought more ETH at around 3,200. I think I bought, which was nice. But generally, yeah, I mean, this was just like. I mean, it was a little bit kind of like I don't think people were shocked by it, because over the past few days, there have been people kind of like warning about this high leverage in the system, and they're kind of like warning about all the froth going on. I even put out my thread yesterday, which I went over in the refuel, about all the froth going on like a lot of the crap that was pumping, and that's usually a signal or at least a sign of like a short-term kind of local top where everything kind of dumps together because there's just too much kind of froth in the system. We wash that out, and long term it just ends up being healthy. So my general thoughts on that is just basically I'm not worried about kind of what happened. I don't think that we're going into a bear market or whatever. And I hope none of you got liquidated or anything like that. I mean, I always advise people against using leverage. Leverage is very, very dangerous. I think a lot of people over a long enough time frame, at least most people, will give back all of the profits that they make from leverage trading. So I would suggest people not to get involved with that, unless you know what you're doing. Like, at the end of the day, like, I can't tell you what to do and what not to do. I've obviously kind of like done some leverage trading in the past as well, but not anything of size or anything like that. It was more just to kind of like, I don't know, get my feet wet with it, especially with DYDX on layer 2. I put like $500 in there, and I went like 3.5x long on ETH, because you had to do some trading on there to get the airdrop tokens, which is coming out today, and I'll talk about that in a bit. But essentially, that's all I had kind of like done. And then I think maybe a few years ago I had done some other stuff with it. But generally, I stay away from leverage, and I think last night is the main reason why, right? Like, you could think, oh yeah, okay, ETH's going to break all-time high, like I'm going to leverage up here, I'm going to go long, and then you can get completely wiped out, and then potentially you could lose like a large chunk of your stash just because you got too greedy. So there's that aspect to consider as well. But on the kind of like note about, I guess, like sell-offs and just general kind of like activity happening on the Ethereum chain during times of volatility, because the activity always goes up. This tweet came that I kind of like quote tweeted from August 2nd that I put out, where I said, once ERP 1559 is implemented, every time someone sells ETH via a DEX, it will be bullish for ETH. Why? Because every DEX trade on layer 1 has to pay gas fees in ETH, and most of these fees will be burned. And we invented bullish selling, checkmate bears. And it played out exactly like this, because pretty much like I think Gwei went to like 400 or 500 or something like that during kind of like the heart of the turmoil for a couple of hours. And we were burning a lot of ETH during that period of time, which I'll go over in a sec. But it's just funny how like just I said this on August 2nd, and seeing it play out, I was kind of like, okay, well, back then it was a little bit of a meme, but with some truth behind it. And now more people kind of like seeing this and being like, okay, well, yeah, this is bullish selling. And I mean, just speaking of the fees that were burned, $6.6 million worth of ETH was burned in a single hour. And that's almost 1% of all ETH that has ever been burned in the last month, just in the last hour, which is crazy, right? $6.6 million, absolutely insane. And there's another tweet that the ETH burn account put out here, basically putting that in context, saying that the issuance for the hour was 605 ETH, which means that we had like 1,960 ETH burned, which is a net change of minus 1,355 ETH for an annualized kind of like percentage here of 10%, 10.15%. So yeah, I mean, we were that's like a massive ultrasound hour, right? That's huge. So these kind of things is just always funny to me, where we kind of like come up with these memes that kind of like turn into truth. And it wasn't just this. Like while I was sleeping, there was some NFT drops as well, and we're burning just so much ETH. It's actually just crazy. 240,000 ETH at before I started recording. Last time I kind of checked there, which is an insane amount of money. I'm pretty sure it should be up to close to $1 billion now, depending on the price of ETH, I guess. 240,000 times. Yeah. Could be close to that if the price was to go up a bit more and we burn a bit more ETH there. So, and that's only in the first month. I mean, September 8th today. So that's just a month and a bit since 1559 went live. Absolutely incredible amount of ETH being burned here. But yeah, just hopefully all you guys are okay after the kind of like bit of a sell-off last night. I don't think that there's anything to worry about going forward. I think that we're either going to do a bit of a slow bleed down maybe to 3K again, or we're just going to continue up from here. I'm not sure. Short-term stuff's always hard to tell, but long-term, nothing's fundamentally changed. So guys, like, come on. There's no reason to be bearish right now. We're still on the path of kind of like growing and adopting Ethereum. There's still a lot of stuff happening. I haven't noticed any kind of like activity kind of falling off yet. Maybe it will over the coming weeks, but I doubt it. Summer's kind of like over for the Northern Hemisphere, or at least getting close to being over. So, what else are people going to do? They're going to be at home on their computers, trading crypto, I suspect. So, yeah, we're going to have to see how that plays out for sure. All right, so the second biggest piece of, I guess, news from the last 24 hours was this thread that Brian Armstrong, the co-founder and CEO of Coinbase, put out. And he started this thread by saying some really sketchy behavior coming out of the SEC recently, story time. Now, I'm not going to read through the whole thread, but basically what's happening is that they went and asked the SEC for kind of like, I guess like their opinions or kind of like feedback on their kind of new lend product that they were going to be offering, where you could basically earn 4% APY via Coinbase by using USDC. Now, in response to this, what the SEC has done is that they've basically said that they're going to pursue legal action against Coinbase for this. And there was some kind of rumors that they're going to try and classify USDC as a security, and just like a bunch of rubbish going on here. And Brian's thread goes through this in detail and basically goes through kind of like how they've been approaching it and trying to open a dialogue, and how the SEC just really has been stonewalling them and kind of like doing all this really weird stuff. So you can read this, it'll be in the YouTube description, but I'm sure you've probably read it already. But I wrote the newsletter about this today, and I want to kind of expand on it on the refuel here. I am not shy about how bearish I am on financial regulations and regulatory bodies in general. I think that they generally just exist to protect the incumbents, protect the people that are already in power, the institutions that are already in power, and kind of keep them in their place. And any kind of threats to that are something that needs to be shot down. Now, obviously, crypto and DeFi are a massive threat to all of that. And I think we're seeing the regulators move now. They did it with Uniswap Labs. I'm sure they're doing it with a bunch of other DeFi protocols that are based in the US. And now, they're going after US-based exchanges as well. For lack of a kind of like better, I guess, thing to say here, and I don't want to go on too much of a rant, but this is total bullshit. Like, this really is total crap at the end of the day. The SEC has become pretty much, I mean, it maybe always was, but I never really paid attention to them too closely. They are pretty much like the laughing stock now of crypto. They are not a regulator that has anyone's interests in mind, in my view. They are not protecting investors by doing this. They are essentially just protecting the incumbents. And for that, they are going to face stiff kind of like, I guess, pushback from the crypto community, because at the end of the day, this entire ecosystem is built upon disrupting the incumbents. So, and from that point of view, the SEC's kind of actions, especially actions like this, which seem very misguided, very kind of like short-term oriented, is just going to push innovation overseas. The US, if it continues down this path, is quite literally going to lose out on hundreds of billions, if not trillions of economic activity in the coming kind of like years around crypto, and that's going to be a very, very big blow to the US economy, I believe. But I'm just one guy saying this, and they're not going to listen to me, but they will listen to a collective community, and they will kind of, and especially politicians will as well. We had the whole stuff with the infrastructure bill, where these politicians essentially kind of, I guess, came to realize that the crypto community isn't just some niche, small thing anymore. It is a massive global community, and we have a lot of people kind of like fighting for us, a lot of people, well-funded people as well, fighting for us, and a lot of big companies around that as well, like such as Coinbase and Kraken and Gemini and stuff like that. And I think crypto will become like a single issue kind of thing that people vote on within the US. So these politicians, some of them at least, are wising up to this and will be appealing to these kinds of people to get their votes. And they'll be fighting for them within kind of like Congress and stuff like that. That's just one angle of it. The other angle is, of course, we can do lobbying efforts as well. Lobbying is just a fancy way of saying bribing. So we can just bribe these politicians and say, hey, we're going to pay you this money to do this for us. Like, thanks. That's exactly how it works right now. And I don't think that's going to change just because this is crypto. And just generally, though, I guess like the long-term goal here is for crypto to basically just disrupt everything and not have to kind of like work around these regulators. We just work through them, basically. We just say, you can't regulate us. We're a decentralized ecosystem. We're going to move to wherever is the most favorable because crypto is an incredibly mobile ecosystem. You can work on crypto from wherever you are in the world. And you don't even have to register a company. You can create a DAO, issue a token, and just pay yourself out from the token from this global community. And then as your DAO grows, as your token kind of like grows in value, you're kind of like your contributions are more valued over time, and you can recruit people, all this sort of stuff. So really, we don't need these kind of like we don't need this anymore. We don't need these regulators. We don't need the real world to register us as like a corporation or whatever. We are basically going to just disrupt all of that, and I think that's what scares them the most. And I think that there are some smart people within these kind of like regulatory bodies who see this and are like, well, I can't let this happen because this is going to basically disrupt my donors, the people who pay me to do this, the people who kind of keep me in power, and this is kind of like a vested interest that I have, so I'm going to fight against this. As I said, we saw this with the Treasury around the infrastructure bill. Now we're seeing this with the SEC, and what really gets me about the SEC is that they have so many, like literally hundreds, if not thousands of rug pulls, scams, Ponzi's that they could go after. But instead, they've chosen to go after US-based companies that are legitimate companies that have provided a lot of value that no one's complained about. Have you seen anyone complaining about Uniswap? The most thing that you could kind of like, I guess, argue as a complaint is people like Bitcoin maximalists saying that Uniswap is a scam or is shady because it's on Ethereum, but like they're just crazy. No one listens to them. So in terms of legitimate complaints, there hasn't been any. Uniswap gave their token to everyone, gave like a massive free airdrop to everyone. Uniswap is the most beloved app on Ethereum. Everyone uses it. It hasn't hurt anyone. No one's asking for protections from the SEC, and yet they're going after them. And same with Coinbase. I mean, Coinbase has some issues around kind of like freezing people's accounts because they have to, because the law enforcement orders them to it from time to time, or they have to for KYC AML obligations, and their customer support, from what I've heard, could be better. But I think just generally, I don't know. I don't think people have been harmed by Coinbase on a mass scale where the SEC needs to hop in and basically say, hey, we're going to regulate you, or we're going to essentially bring charges against you or whatever. So really, it's total crap. And I really have, I didn't have any faith in these kind of like regulators to begin with. And I think that, I'm not even surprised that they're doing stuff like this. I kind of expected it. I've been saying for a while that we've entered like the geopolitical sphere as well. And that includes politics of all kind of like walks of life, whether that be in the US or, politics within regulators, politics within Congress, politics within local communities and stuff like that. That's just going to be a big theme going forward. But yeah, really, really crappy to see this. I'm hoping that Coinbase can succeed here in pushing back the SEC because unfortunately, Coinbase is a centralized exchange. They don't have the luxury of just saying, oh, well, we're decentralized. You can't shut us down. We can just ignore you, right? They can't do that. And we need people like Coinbase. We need companies like Coinbase because they're the front door to crypto for a lot of people. And if they kind of get neutered or if something happens to USDC, well, that's really bad overall for the ecosystem. It doesn't matter that we're decentralized. That would be very, very bad over the short to medium term. And we would have to rebuild a lot of the ecosystem if something happened there. So yeah, I'm going to, I guess, see how this pans out over time. I'm not sure how often we'll be hearing updates about this. I guess like the SEC moves slow, being a government agency, but it's funny because they move slow generally, but when they want something to happen that favors themselves or their kind of vested interests, then they move faster. So maybe we'll see kind of like this play out faster than we've seen in the past here. And then a final thing I wanted to kind of note was a tweet from Eric Connor here, who says, Anthony and I, and that's me, Anthony, we talked about this on a recent podcast episode episode. But I think elected officials are extremely underestimating the influence of influence incoming from the crypto community. There's a gigantic power, culture, and wealth shift happening in that most are ignoring. And this is very, very true because, as I was explaining to you, around the infrastructure bill, I think the politicians finally realized that we're a very big community. So they were like, holy shit, like we need to actually kind of like shift our stance here. We need to be more crypto friendly if we want to get these voters on board and stuff like that. But it's not just within power, it's also in the culture and the wealth. Like think about the wealth transfer that's happening right now within crypto. There are a lot of people that come as like the late adopters, and they've still yet to come. And the late adopters are going to be I guess like institutions, and the institutions like retirement accounts and stuff like that have a lot of this money or this old money in it that's going to buy these things after they've gone 1,000, 10,000x from their starting points. And that wealth shift is insane. Truly, like I don't think people realize how insane this wealth shift has been, and how many newly minted kind of like millionaires there are that are young people that are going to fight for this crypto ecosystem till their last breath. And this is the kind of like gigantic shift that's happening, as Eric notes here, and we're going to see it play out over the coming years. But yeah, I think the final thing on this one was from ChainLinkGod, who basically tweeted one of Brian's tweets and said, "This is called legally enforced racketeering. The SEC refuses to publish public guidelines, tell companies to work with the SEC, sue them after they ask for help, and profit. And so who's the SEC protecting? The consumers? Lol, no. It's a traditional rent extracting prison of our financial system." I mean, I couldn't have put it better myself. This is exactly what's happening. They're not protecting consumers or investors. That's always been a psyop. That's always been a lie or a narrative that they've told. They are protecting the vested interest, which are the big institutions, large institutions in the traditional finance space, and they will continue doing this for the time being until we get like more of a power shift there. The culture and wealth shift is happening, but the power shift takes I think longer to play out and is a bit more of a kind of like a heavy fight there. But the crypto ecosystem is ready to fight. We're not just going to lay down and let kind of like these bodies that we're trying to disrupt just kind of roll all over us. That's not going to happen. All right, moving on to something else for now. So DYDX's token is going live today. Might already be live by the time you've watched this. It's kind of unlocking. And Antonio, the founder of DYDX, kind of put out a highlight thread of kind of like what the current state of DYDX is. So there's 32.7k DYDX holders. It's a very even distribution, not whale dominated, which is cool to see. There's been $13.8 billion of total trade volume, $256 million of open interest, and $141 million of Maker capital stake. Now that's not Maker DAO, that's Maker as in the market maker capital stake there. So yeah, and then he goes on this thread to kind of like detail more about this. But yeah, I mean, this is going to be a big token launch, I think. I mean, if you look at kind of like the most successful apps on Ethereum, in terms of like volumes, users, all that sort of stuff, DYDX is right up there, and they're a layer 2 protocol as well. They're built on Starkware's technology. They're not built on layer 1 at all for their perpetuals exchange. They're fully layer 2, and they still have incredible trading volumes. In terms of like both 24-hour and total trading volumes, and kind of like rivaling their layer 1 counterparts, which is really, really awesome to see. So in terms of like what the token can be valued at, I'm not sure. I think I have like 1,100 tokens that I got in an airdrop coming to me. I don't know what I'm going to do with them. I mean, I might sell them if the price gets ridiculous from the get-go. Might hold them. You know, it's always funny because if I think the total token supply is like, I can't remember what the total token supply is, but it's something really large. So if the price goes ridiculous, if the market cap goes to like $10 billion or $20 billion on day one, I may just end up selling it, but who knows? Like, it's always hard to tell with these things, because at the end of the day, DYDX has this insane growth, and they're just getting started. Like, this is really early days for them. They're gonna, I guess, like have much bigger growth. The perpetuals is a massive market. They're taking more and more volume from the centralized space as well. So who knows? I don't really have an opinion on the value of DYDX going forward, what it's going to kind of open out or anything like that. But I mean, my DYDX tokens are at sassel.e, so people can just see when I sell them. If I sell them like on on day one or whatever, I probably will just put it back into ETH anyway. But it doesn't mean that I'm bullish or bearish. It's more so just kind of like taking free money off the table, and also taxes, because I owe kind of like taxes on that because it's considered income. Airdrops are considered income in Australia. And I think it's funny though, this is getting into the tax stuff now, but it's funny because like I got my DYDX tokens when the value of DYDX was 0. So technically, is my cost base is 0? I don't know. I'm gonna have to talk to my accountant about that. But I mean, tax is always a headache when it comes to this sort of stuff. But anyway, I don't know what kind of like I'm gonna do there. I don't know what people are gonna do. I'm sure it's gonna be a volatile opening here, and I'm sure it's gonna get a day one listing on like Coinbase. I don't know, day one or kind of like very shortly after day one, because Coinbase is an investor in DYDX, and Antonio is actually Coinbase alumni, one of the first employees there as well. So I would, and there's like, I mean, a lot of investors in DYDX that kind of like probably poked Coinbase and be like, hey, you need to list this. So I wouldn't be surprised to see that. But who cares about centralized exchange listing? It'll have incredible kind of like liquidity and volumes on decentralized exchanges anyway, and probably on the DYDX exchange itself. So yeah, it's going to be interesting to see how that launches today. And speaking of layer 2, Optimism over the last 24 hours did $450,000 worth of fee revenue, which is insane. You can see on the chart here the growth. I mean, that's an insane amount. I mean, that's almost as much. I mean, that's more fee kind of like revenue than I guess like a lot of protocols out there. And now, some people are complaining about this, saying, "Oh my God, the fees on Optimism are kind of like really high already." And I explained all this yesterday on the refill. I'm not going to go through it again, but essentially, Optimism currently has transaction limits. And there's more transactions that happen, the lower the fees for everyone, but only once those transaction limits are kind of like much higher or kind of like removed completely. So for now, on Optimism, because the market volatility happened yesterday, people were willing to pay whatever to do arbitrage transactions between, Uniswap and kind of like other exchanges or other kind of pairs and stuff like that. There's synthetics and Lyra and stuff happening on there. But, it was just really cool to see that Optimism is already kind of getting this much revenue. And one thing that I should highlight about this as well is that Optimism has said that all of the kind of like fee revenue that they make that goes to their centralized sequencer, all of the profit from that, so not the total kind of fee revenue, because they have costs. Obviously, they have to post to layer 1 for batching, and they also have costs of running the kind of like software and hardware and stuff like that. But essentially, they promised to give all profits to public goods. So they could end up having tens of millions of dollars by the time they kind of like pay that out just from these fee revenue alone, which is incredible, right? Like, that's really, really cool that they can give this to public goods funding, and they can split it between things like Gitcoin and maybe Coin Center and other sort of stuff like that. So it's really cool to see that. But yeah, I guess on the fee revenue side of things, the thing with layer 2s is that the cumulative or kind of like, I guess, total aggregate fee revenue can be really high, while the individual transaction fees can still be really low. Because if you have, I think Optimism and Arbitrum can theoretically do, 4,500 transactions per second, or something like that. Or maybe that's too high. I haven't checked the exact numbers here, but let's just say for simplicity, it's like 3,000 transactions per second. That's per second, right? Like, so per day, I can't even do the math in my head that quick. But anyway, I think it would be 180,000 transactions. If it was at capacity, it would be 180,000 transactions per minute, right? Like, this is the scalability that we're kind of talking about here. And then, per hour, that's obviously, 180,000 times 60. That's many, many millions. And then per day, you're getting into like the tens of millions territory of transactions per day, probably like hundreds of millions. I don't know. Maybe I'm doing my math wrong there. But if each of those transactions are paying like 10 cents in fees, well, that's still $10 million of fee revenue. If it's 100 million transactions or for the day, that's still $10 million of fee revenue for the layer 2. So in aggregate, that's really cool. But for each individual, they're only paying like 10 cents or something like that. So that's always something good to keep in mind as well. And speaking of Optimism, there is kind of like a forum post here from Kelvin Fichter, who works at Optimism. He's taking on an EVM expert in training as part of the Ethernaut DAO. So basically, if you are someone that wants to get involved, I guess like with Optimism, with Ethereum, with the EVM, outside of maybe the core protocol development stuff, then definitely go check out this blog post, because as Optimism says here, if selected, you'll learn all about Solidity, the EVM, and what makes Ethereum tick under the hood. You'll know Ethereum like the back of your hand. If you're a software engineer looking to deep dive into the Ether, you should go apply. And I'll link this in the YouTube description. You can go apply. I think this is a really great initiative. We need more people kind of like doing core protocol stuff at both layer 1 and layer 2. So HopProtocol is kind of like asking which networks and tokens they should add next to their bridge here. So you can see they currently support Polygon's POS chain, XDAI, Optimism, with Arbitrum coming soon, and another one coming soon here, Redacted. And they have support for USDT, USDC, Matic, and Ethernaut DAO coming soon as well. So I've discussed kind of like the bridges before and how I've kind of said that I think that these bridges should really just focus on supporting, I guess, things like the stable coins and ETH and maybe even wrapped Bitcoin, just like the most liquid things on Ethereum layer 1, and then kind of go out the long tail on it, because bootstrapping liquidity for those critical pairs is I guess like very, very important. And then if people want to trade between things on layer 2s, they can just use Uniswap or SushiSwap or whatever on the layer 2 and then bridge out using kind of like these stable coins. And I did mention at the time when I was talking about this that unfortunately, these kind of things have tax implications as well, so I'm not exactly sure how that would benefit each individual person, and it really does depend on the individuals at the end of the day. But yeah, if you want to kind of like go reply to this tweet for HopProtocol and let them know which networks and tokens you would love to see next, then you can go either reply to this tweet or go to Hop Feedback here. This will be linked, of course, and kind of like give your feedback there. All right, so last up here we have takenstheorem with a really great little chart here showing the statistical causal evidence that NFTs are strongly moving the needle when it comes to gas prices. So this was a case study done on the 2nd of September. You can see the OpenSea subset NFTs is time T, base fee at T plus 1, Granger causality test on deltas, P is less than 0.003. I'm not even going to pretend to know what that means, but I just read it out anyway. Taking this all together, and it accounts for a 42% variation in base fee. So essentially, in plain English, this is validating the thesis and the hypothesis that kind of like myself and a few other people in the Ethereum ecosystem has had, that NFTs are what's driving the gas fees higher, or at least the base fee higher over time. And I mean, all the evidence is pointing to that. All the on-chain evidence, all the heuristic evidence, all the kind of like social evidence. There's no doubt in my mind that that's what's caused it. So if you see anyone saying 1559 caused gas prices to go higher, just say no. It was network activity going up because of NFTs. And if you've got some charts and stuff handy, you can link it to them, because I think that's what's most important for people to kind of like get their head wrapped around. But yeah, cool to see just another kind of like chart validating this thesis here. And I guess like on the topic of fees as well, there's one other thing I wanted to kind of talk about here, and that's on the topic of kind of like layer 1 fees, and people asking me, are they ever going to go down so I can move things that are considered dust? Now, dust assets are considered assets that cost too much to move in fees. So say you only have like $1 worth of ETH in a wallet and you want to move that, well, then it might cost you $5 to move. Well, that doesn't make any sense to move that ETH, right? So that just gets stuck there. It's just dust. You can't really do anything with it. I'm going to be honest, I don't think fees on layer 1 are ever going to get to that point where you can move that sort of stuff out. So, and it's not even just $1. I mean, if you wanted to transfer an ERC20 token right now, I can't remember the exact cost of it. Maybe it's $10 or $20, depending on the token. All those sorts of things, I don't know. I don't think the fees are going to get down that far on layer 1. Maybe they will eventually when we do kind of like, I guess, increase the gas limit, and for a short period of time, you have a window where gas fees are lower again, or maybe the market just goes really quiet and you have a short window. But in terms of like the average gas fee and over the longer term, I don't expect them to fall to a point where you can move kind of like $10 worth of a token cheaper than you can move it for. So cheaper than it's worth, and stuff like that. So unfortunately, that's the case. So I mean, that's just another case to just do all the stuff that you can do on layer 2 now, because if you just have stuff on layer 2, well, then you're not going to get kind of like, I guess, into this position where you can't move things because it costs more than it's worth to move it. And this is why I've been saying for a very long time that L1 will just be the kind of like security whale chain, security layer for layer 2, but also like a whale chain, or like a chain with just like layer 2 proofs and batches on it, and everyone else will just sit on layer 2. That is the Ethereum roadmap. That is how Ethereum is scaling. It is painful in the short to medium term for people who are like us, who are innovators and early adopters, but in the long term, it will work very, very well for onboarding the world and keeping things decentralized and secure. And on that note, I'm going to end it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.